Thank you, and good morning, and welcome to Hansuke's DAC6 Academy webinar series. This webinar is the first that we are hosting in cooperation with WTS. Please do use the chat function on the right of the screen to introduce yourself, and do let us know where you're from. Thereafter, please let us have your comments on the proceedings as we go along for the benefit of other participants. You can raise questions for the panel by clicking on the questions button at the top. And if you miss anything, don't worry. You will have access to the on-demand recording straight after the webinar ends. Additionally, the slides can be downloaded, and of course, the events team at Hansuke is ready to help if you wish to contact them directly for any of the materials. So, to our audience, thank you for taking the time out and being here today. I am Ali Kazmi, and I am Managing Director at Hansuke. I will be the webinar moderator. I have been in the financial services tax industry for over 25 years, and DAC6 is by far the most technically complex automatic exchange regime to date. Today's webinar will look specifically at the deferral aspects of the directive, and our panel will cover why did the deferral happen, the role played by the trade associations in securing the deferral, and also the practical challenges for jurisdictions who have foregone the time extension. And finally, and very importantly for you, what must financial firms be doing in order to benefit from this time extension? We will intentionally not look at other areas of the directive, which are to be covered by later webinars in the DAC6 Academy series. With that, I would like to invite each panelist to introduce themselves and share one interesting fact about themselves. So with that, if I can invite Francisco.
Thank you very much for the kind introduction, Ali. Well, my name is Francisco Cabral Matos. I'm a tax lawyer in Portugal, and I've been working for the past 12 years in tax law. And also, as you were saying, by far DAC6 seems to be the most challenging regime due to its cross-border setting, but also with the complexities of the provisions that we will all need to interpret and to apply. In this context, I am very happy to be present today in this panel discussion, and I look forward to try to look for some positive ways forward in all of this complexity that we will be discussing in the next few minutes.
Thank you, Francisco. Glad to have you on board. Danish?
Yes. Hi, everyone. Good morning. Thanks so much for having me on the panel, Ali. My name is Danish Mahbub. I'm a senior reporter with ITR. We were formerly known as International Tax Review. It's a B2B magazine that covers international tax news. My own area of focus is on direct taxation and international tax developments that affect multinational companies. I report about this area. As a side interest of mine, my reporting time on ITR has been for about 2 years. So I've been in tax for about 2 years. And my side interest is on data science and journalism, which is my specialty. Thanks so much, Ali.
Wow, that sounds really impressive. Robert?
Good morning, everyone. My name is Robert Welzer. I'm a tax partner with WTS in Frankfurt. I'm already combining financial service interests plus taxation for more than 25 years. And as you indicated, DAC6 is quite an interesting tax technical data feature, which we are currently struggling really to bring forward. I'm really looking forward for this discussion to learn. Thank you.
Indeed. Thank you very much, guys. What I will do is I'll just talk a little bit about, just what the deferral is about, and then we can move to a panel discussion if that's okay. So firstly, I think sort of like if we look at the original timeline was essentially due to have the first reports submitted by 31st of August of this year. And this 31st of August deadline was going to cover the reportable period of 25th June 2018 through to 1st July 2020. So that 2-year span, which is the first and the third bar, the 25th of June 2018 to 1st July 2020, that report for that period was going to be submitted by 31st of August. And that was the key critical information. And then the tax authorities would take that information after they've been collected and send it across to other corresponding tax authorities by the 31st of October. And that is what's essentially moved forward. So that was what we call the 2-year period, the back book exercise. And then there was from 1st of July, you would have gone into the business as usual reporting period, which was essentially on a quarterly basis and 30 days after a transaction had been an arrangement had been identified. So that was the original timetable. And now what we're looking at an EU level is the optionality provided by the new amending directive, which basically moves from a two-phase approach. As I said, the first phase was the back book and the BAU. Now you've essentially got 3 phases. You've got the back book exercise, which runs from 25th of June to the 1st of July. That 2-year period, now the report, rather than being on 31st August, will go to 28th of February 2021. And what you will get also is the BAU will now start from 1st January 2021. So that means that any transaction 30 days after or on a quarterly basis thereafter will be picked up. But now you've got a middle transitional period as well to contend with, which runs for 6 months from 1st of July 2020 to the 1st of January 2021. And that 6-month report needs to be filed by 31st of January 2021. Now, most people, when I tell them about this, they will say, well, hang on a second. You've got a 2-year period, an earlier 2-year period, where the report is due by 28th of February, yet the 6-month period, the latter transitional period, that report is due a month before. And that's because probably the logic to that is there is a bigger chunk of data that needs to be filed. So that's really what you're looking at. These are the sort of like optionality. Now, with that, if I can probably turn to Danish, if you could just give us an update as to where are we in the readiness when it comes to sort of like, state of implementation of the laws.
Sure, Ali. So what's reflected over here in this graphic, it seems that legislation and guidance is still lacking in many jurisdictions. So specifically guidance, but legislation is still at a stage where 5 jurisdictions have not implemented just yet, and 1 jurisdiction is still in the phase of drafting. So while you were mentioning that the original timeline focused on starting monthly reporting in July, historical arrangements were supposed to be reported on August 31 of 2020. With regard to the deferral, the EU Council voted in favor of the Commission's proposal for a 6-month deferral with the option of an additional 3 months if necessary under extreme circumstances. So this could possibly be another spike in COVID-19 and further lockdown measures. Most jurisdictions adopting the 6-month deferral have historical arrangements now that are due in February of 2021, as you were also saying, instead of August now. Monthly reporting starts in January of 2021. However, I think that Germany's surprise choice not to defer the reporting deadlines is troubling because it can undermine the wider number of deferrals happening in the EU. From ITR's DAC6 tracker, we found that out of 28 EU countries, 22 already have legislation in place. But like I said earlier, 5 are still pending implementation and 1 is still drafting legislation at this time. So far, only Germany, Finland, and Austria have announced the option not to defer the reporting deadlines. And many EU countries have made their announcements about the 6-month deferral following the EU Council's approval earlier in June. Thanks, Ali.
Thank you, Danish. I was just going to sort of like look at or we can come back to the deferral timeline, which countries have come on board and so on when we talk about Germany, as you highlighted. But before that, I think what would be useful, and particularly sort of, I would like to invite Francisco to talk a little bit about why did the deferral take place?
Thank you, Ali. I think that it is interesting to look at this point with different angles and different perspectives, because when we talk about the financial industry, it is worth noting that up until today, most likely, the financial players are the main feeder of information of European-wide databases that are used by tax authorities due to the amount of information that is already being provided under several exchange of information regimes. That said, it is crucial to players in the financial sector to at least be certain on how to adequately comply with obligations that are imposed to them, even if they are not the ultimate taxpayers that may be subject to tax inspections and to any tax impacts ultimately. But certainly the financial sector would expect at least some level of comfort in terms of legal certainty and clarity. I think that point was relevant to start a process where on the private sector side, it was becoming clear that the lack of implementation in many of the European jurisdictions would jeopardize their ability to implement processes in an adequate way to be fully compliant with DAC6. This point should be linked with not only the delay in the transposition of the legislation, as Danish was mentioning, but also the delay in guidelines, which I believe in the context of DAC6 will have a critical role, because having several member states adopting domestic legislation will imply that, at least in terms of the tax authorities' approach, we try to find a consistent approach to the different rules that will be in place. And in that respect, we shift the perspective from the industry to member states and tax authorities themselves, as I believe that it is also interesting to note that probably tax authorities are not also acquainted with the tools to deal with the amount of information that they will start receiving. So I think this point is also a critical justification for the deferral, because even if we look at the tax authority side, from the moment they receive the information, there will be the need to filter, to review, and then to exchange the information between member states. And to the best of our knowledge, this step is also not yet completed from the competent authorities side. Last but not least, of course, COVID-19 played a role, and of course, due to all the issues that companies are facing and the financial industry is facing, this would be a disproportionate burden, I would say, if we, on top of all of the challenges, add the challenge of dealing with the implementation of DAC6 at this stage without a deferral.
So, if I can ask Robert, I mean, did you expect the deferral, did you see it coming?
Let's put it this way. From a German perspective, Germany till a few days ago was really advocating for a deferral, and everyone, the Ministry of Finance, informally announced or declared that there will be a deferral, and more or less we were, let's say, quite significantly surprised when the Ministry of Finance, Mr. Scholz, declared there will be no deferral. What is here the background? The law has been implemented, and as it is implemented, let's say, additional legal action from the legislative or in the legislative process would be necessary really to implement the deferral. So if there is no action on the level of the Ministry of Finance at all, there will be no deferral, and that's the current political situation.
Robert, before I go to the detail as to what specifically happened in Germany, what I want to know is, was the expectation, did you expect a deferral even to be tabled at the EU level? Is that something the expectation was there, that the EU would sort of like accede to this request?
So, okay, that's, let's say, prior to the German very specific situation at this point in time, there was a lot of lobbying in this direction, and let's say there was Germany was also advocating deferral on EU level, and with the COVID-19 crisis, it seemed to be very reasonable to defer, let's say, the reporting timelines, taking into account what already had been addressed, the late implementation, some jurisdictions still lacking implementation, and then to have some guidance. Let's say in Germany, we at least have some, let's say, guidance, 70-page draft decree already in place. In other, for the jurisdictions which are very key, essential for financial service activities, such as Luxembourg, no guidance on from a ministry or from the executive level. So yeah, we are really struggling here, and to get another 6 months time period to align understanding, interest, etc., would have been very helpful, and this has now been, let's say, deteriorated by the German actions.
It's quite interesting because actually I've seen the German letter, which the various domestic trade associations also, I think it was the two banking associations, the German insurance, sort of like, they've done that, as well as, of course, this letter that we've cited over here, which went into the commissioner, which the likes of, EBF, EMA, Pharma have all signed up to. One of the interesting things for me is, I don't think that all, or from what I understand, is not all of the trade associations wanted the same thing either. There were clearly some desire to even have it further extended, which, then within the different trade association, there was a coalition or at least a reconciliation made. I know, Danish, you've been speaking to various people just in the run-up to that EU's deferral. I mean, did you see this one coming, that the EU may be willing to, accede to the request of the trade associations?
Yeah, Ali. So on that front, I understand that a number of banks are considered intermediaries, and they were dealing with these reporting rules because as being considered intermediaries in setting up tax arrangements, many may be TP related and impacting routine commercial transactions. So FS products and services can give rise to tax arrangements, despite those products and services perhaps not aimed at actually getting a tax advantage in the first place. So that's something that I found as a consideration that's important going forward. And with regard to the European Banking Federation and the European Fund and Asset Management Associations, yeah, they did lobby for a delay in April. along with 9 other associations along with them of significant size as well. And they lobbied because of the pandemic and delays in setting up their systems for reporting. So it was very much an IT focus at the time as well. These reporting rules impact a number of intra-group transactions that fall under the regime's hallmarks. So that's something else to take away from this, which could impact corporates moving forward. When it comes to the pharma example, which is another area that's impacted when it comes to industry, Swiss pharmaceutical companies receiving royalties from a German subsidiary will fall under hallmark C of the reporting rules. And that refers to cross-border payments benefiting a preferential tax regime. So that's just one practical example where it could come up. And this is an interesting point that I've been coming up in discussions with advisors on. And it's that some banks suspect that there might be a negative fallout on DAC6 that can be blamed instead on the broad hallmarks, which shift the blame onto the pandemic instead. So these are some of the areas that I've been hearing developments on right now in the environment.
That's quite interesting because it's, from what I hear, is actually, of course, the trade associations asked for it. And a lot of pundits basically said, no, it's not going to be granted. Why would, you know, at a European level, a concession be granted essentially from requests coming from the financial services sector, which unfortunately doesn't enjoy good press at the moment. So, so most people thought this extension was not going to be granted, but the interesting thing is the desire for the taxation authorities, whose own systems weren't going to be ready, for them to sort of like essentially badger the European Commission to accede to this extension request. Now we have a question from the audience, which is, if I can ask Francisco, I mean, would it be an idea that because those underlying issues that you highlighted for deferral, they haven't gone away, to just basically freeze DAC6 implementation completely until we out of the whole, you know, sort of like pandemic and the challenges that face the industry?
Thank you, Ali. I think that that would be a great question to be addressed maybe some time ago, and well, we have not discussed this among the panel, and eventually my colleagues in the panel may have a different perspective. But I think that one critical point that is creating all of the turmoil in the industry and, well, in taxpayers in general, is the fact that different countries are actually taking different timings for the adoption of the directive, and moreover, that the interpretation that we are becoming aware of, going back to Poland, which started the process earlier than everyone, but going through the guidelines that we know up until now from some of the countries that have already adopted the basic legislation, it is clear that in some borderline cases, tax authorities will not necessarily take the same view over what are the reporting transactions and which are the reporting entities. We should bear in mind that, for example, even the concept of intermediaries and intermediaries subject to any legal or contractual confidentiality rule, even these entities will be subject to different regimes in different member states. So I would say that at this stage, discussing a standstill clause could have a negative impact in the sense that it will delay the clarity that everyone is looking for. So I believe that we are already facing, and that is something that we will discuss also during this session. We are facing specific struggles that come from the deferral process and the different timings from different member states. I would probably see as detrimental that we now have a complete standby of all of the process, not only because the financial sector and stakeholders in general are already preparing to comply with this, and therefore there has been a significant investment from every stakeholder, from tax authorities to taxpayers to intermediaries, and therefore there is already an investment that should lead to some actual results, to my view.
Thank you very much, Francisco. That's a good, valid point there. Now I'm going to turn, Robert, to the German problem, if I can call it, because, you know, of course, something has come about at the EU level. This easement has been granted, which, albeit optional, was available to all the member states. And, you know, as you mentioned earlier on, certainly German trade associations had also been part of that whole lobbying effort to delay. And then the largest economy in the EU decides to go the other way. What happened?
Yes, really what happened, probably it's a personal decision of the Ministry of Finance, Mr. Scholz. And just today, there was an article in the leading newspaper in Germany, the Frankfurter Allgemeine Zeitung, where more or less 8 states in Germany ask or really intend to get a delay or for the reporting period, because it is really triggering very substantial problems, both for the industry, but also conceptually for the overall, let's say, layout of the DAC6 reporting. If I may highlight a little bit in line with Francisco, let's say a complete freezing now with Germany of DAC6 reporting, now with Germany, let's say, not granting a deferral or intending to grant a deferral at all, due to, let's say, political reasons. I assume, I think a complete freezing is wishful thinking, but I would say not really, let's say, very likely to be granted. What does this really triggers now here? This non-deferral of Germany, and as you indicated, Germany, one of the biggest here economies in the EU. And what are the repercussions, especially for the financial service industry? As Francisco and Danish already outlined, you have different interpretation in the various jurisdictions. Who are the intermediaries? What are reportable arrangements? Yes or no, or even no, let's say, guidance at all. And for the industry, which is in essence a cross-border industry, and throughout the whole value chain of, let's say, investing, asset management, financing, and also securities trading, you find many independent, or there are the potential of many independent intermediaries, and there is no current perfect alignment of communication between the various intermediaries reporting potentially on the same structure. And now Germany is really going, let's say, forcing the reporting. No communication alignment with other intermediaries in other jurisdiction is finalized. It is just in the starting process. And so the outcome might be, let's say, different reporting standards. Probably various intermediaries have employing different views on their reportings, and so on. And this will ultimately all be consolidated on the EU level, and with probably diametral reporting on the same arrangements or lacking of arrangements, and creating their mess. So I think from a technical point of view and from an overall perspective, a deferral, Germany should go the direction to grant the deferral again, but I'm very reluctant. I'm not very optimistic in this respect. So a lot of problems are ahead of us.
Sure. So what you're saying is, just from an environmental perspective, before we go to the firm's specific challenges, Germany may, are you saying, is whilst you're not optimistic, but there is a debate going on in Germany, still asking for a deferral then to
Yes.
fall into, I see, okay.
Yes. So what if I was not elaborating? Let's say these are 8 major states in Germany, or the Ministry of Finance of 8 major states ask for a deferral. Not only the trade associations and so on, but really the Ministry of Finance of 8 states, for example, Bavaria, and so on. And they are all, let's say, within the coalition. Germany has a social democrat, Christian Democrat coalition. The Christian Democrat ruled countries more or less ask for the deferral. So it's a split in the cabinet of the government, to put it this way. If you analyze this from a political background.
So what I'm hearing is really a political issue.
Yes.
That's just being played out, unfortunately.
Yep.
And whilst these politicians are obviously sort of like these push and pulls are taking place, I mean, so if you have a firm in Germany or your clients, what should they be, will they be ready to file on time? I mean, is the industry taking this seriously?
I think currently, let's say, I do not want to be cynical, but let's say the holiday season probably will not be so many will be on holidays during August. So it is high season to finalize at least the reporting. There is no, let's say, with the catch-up period or there is no penalties associated with in case of let's say failure or misreportings, but nevertheless, as especially financial institutions, with from a reputational point of view and also from a regulatory perspective, to have to apply all the regulations, they will report. And therefore, some sort of reporting will be conducted. What's the quality standard of the reporting? What is the alignment with other intermediaries, etc.? Very, there are big questions to be raised in this direction.
So what you're saying is, whilst there are no penal consequences of being late, and there's no fines and so on, the German authorities have clarified.
Yes.
But nonetheless, people are taking the deadline seriously because of reputational reasons, yeah?
Yeah, from reputational and in the financial service industry, as it is a regulated industry, from a general, that you comply with regulatory rules.
So it's going to be a very busy time for German tax advisors like you.
Maybe, yes.
So shall we look at specifically what are the challenges, if I can move away from Germany now and look at the jurisdictions that have or brought in these deferral? Has this been I heard some sort of like some elements of that this may be challenging. So with that, Danish, if I can invite you to sort of like comment on, are you aware of any challenges that people have identified associated with the deferral?
So I was looking into Poland's implementation of this, but with the wider deferral, I do believe that the German deferral in specific will undermine wider deferrals in the EU, and that's because most entities will, most companies, most intermediaries will have part of their chain an entity in Germany that's dealing with the reporting requirements moving forward at a sooner date than the rest of the intermediaries that may also have to report in the chain in other jurisdictions that are dealing with the deferral on a longer basis. So while in Germany, I think you have to report in September or October, which is a lot sooner than the deadlines that are taking place in, for example, the UK, which deferred quite quickly after the EU Council approved the deferral. And now they're Now they're deferring in January, and they also will be reporting historical arrangements in February.
So let me just get that straight. So what you're saying is that when you use the term, it's undermining the deferral. What you're saying is because Germany's racing ahead and not taking the deferral, quite often firms are going to be dragged into sort of like complying earlier, even though their domestic or their cross-border arrangements may have otherwise enjoyed the deferral. Is that what you're saying?
That's right. And it's partly because that Germany is such a large business hub as it is, and it's the largest economic player in Europe. So with that being a given, you would expect there to be some clash with other reporting chains because of how significant Germany is.
That's interesting. That's essentially what I'm seeing as well. Number of clients of ours, they're getting letters and demands from German entities saying, "Is tell us now because we want to be ready now." Thank you, Danish. With that, can I ask Francisco? I mean, do you? What are the challenges that you see that the deferral has produced?
Well, actually, I would pick up on this last point because I think that from the moment that the deferral has been accepted in the general framework, and to the extent that a considerable part of the European member states are willing to defer the actual reporting obligations, having a limited number of member states continuing the process without any deferral, such as Germany and Austria, would essentially hinder the effect of a deferral. First, because this is quite a unilateral approach to what is expected to be a harmonized system. We know that Germany has legislation and has made public some guidelines on how to interpret the provisions of the domestic legislation in Germany. But we know, and I think that this was also a good point raised in our audience today, that from the moment we are talking about cross-border transactions, well, if I do have to comply with a reporting obligation in member state A, being, for instance, Germany, even if on the other side of the border I am having the benefit of a deferral, well, of course, that from the moment this is a cross-border setting and there are potentially multiple entities to report, at least the ones that will remain in Germany will be facing the pressure to immediately report. So this creates challenges not only in terms of legal certainty, again, which I believe it will be a critical factor, because in some countries, the example being Portugal and well, Spain, Italy, I've been discussing with several colleagues, the legislation has just been enacted in Portugal yesterday, to be honest. We don't have any guidelines. We don't even know the forms that will be submitted. And so it is very difficult to anticipate a coherent interpretation of the provisions in cross-border transactions. Secondly, I think that it is also important to mention that in the context of the DAC6, what we are trying to ensure is that all member states are in a common level playing field in terms of the information that will be shared. And so it's a bit astonishing that, at least this was my view from the beginning, that this was left a bit as an optional regime. It would be eventually more sound to have a clear rule in the amendment to the DAC6 directive saying that simply the first reporting obligations are due on date X, because I would say that eventually, even if we don't have a 6 months deferral, if we will end up everyone reporting by November or December, it would be in any case better that everyone is reporting at the same time rather than having multiple deadlines in multiple countries. If we look at this point in multinational groups and in the financial sector, as Robert was saying, the financial sector is multinational by definition. Well, if I don't get the deferral all throughout Europe, I will have to report some transactions, at least in some member states, and that will create a complete confusion in the process.
Yeah, I mean, it's interesting. I was interviewing a tax technologist who specializes in DAC6 last week, Hank Moonen, who was specifically talking about this very issue of, you've just gone from a rubric that had 2 reporting periods into 3 reporting periods. And that's, again, not uniform across the 27 member states. So that's really added a lot. It was a complex enough regime to start off with, but with differing timelines, it's really created a disharmony. Now, staying with you, Francisco. Now, as you know, the UK had the DOTAS scheme, which provided the architecture, the mechanics, which have been essentially been borrowed and implemented as part of DAC6, particularly the very term hallmark and so on, idea of promoter. So these are clearly grounded in existing regime. Now, the UK regime was a purely domestic regime, whereas DAC6 is a cross-border regime. Now, Portugal has had its own domestic regime like the UK, and I would like to tell you, for you to just elaborate upon that, because as you know, there's the problem of Poland that we've seen. They were moving forward, then there was, they had to step back because of this whole domestic versus cross-border challenge. Where is Portugal on that?
That is an interesting point, because in fact, Portugal followed some of the international experience, I would say most likely from common law systems. And I think that we were certainly within Europe, but well, even worldwide, one of the very few civil law countries adopting a hallmark disclosure regime similar to the DOTAS in the UK. With one major difference is that in terms of practical implementation, this regime was in force from 2008. First reporting obligations came in 2009, but virtually nothing happened from 2009 until today, which means that we had a domestic regime, a unilateral reporting regime for, and that should be noted, aggressive tax planning schemes. So it was not as broad as we are now talking on the context of DAC6. But secondly, it was not applied in practice. There was no evidence of any consequences thereof. The option from the Portuguese legislator was to expressly revoke this regime. And this has been creating a lot of technical challenges, because with respect to the retrospective periods, DAC6 will apply simultaneously with our own domestic regime, because basically since 2009 this regime is in force, and therefore for the period covering 2018 to June 2020, the 2 regimes will be potentially applicable. But the option was that henceforth the domestic legislation, the domestic regime has been revoked, so that the DAC6 regime will take precedence, if you want, and will cover both domestic and cross-border settings. Since there was no specific exclusion with respect to the territorial scope of the previous regime, potentially we could have a double reporting obligation for the past, and we would only have a single reporting obligation for the future, now that DAC6 will be the only legal regime in force. This creates, as you were saying, many issues, especially because Portugal has also taken the position that purely domestic transactions would not be covered by the retrospective period. And therefore there are several challenges that we are facing ahead as to how to interpret the 2 separate regimes for the retrospective period. Essentially, for the future, we will, I think, in that case, differently from the UK, as I understand from our previous interaction, we will take a different approach from the UK. We will only have a single reporting obligation.
Yeah, that's interesting, because oddly enough, I was working with a client recently, and that's the very discussion was in the UK, you could have a filing under DOTAS, a filing under DAC6. You could have a suspicious activity report being filed to a different regulator under the sort of like the fourth money laundering directive, the fifth money laundering directive now. So you've got a number of parallel regimes that could be triggered just by one transaction. And so that's something to just look out for. And I think that's going to be one of the challenges. And as you say, with the timing, what comes when is going to be really important to figure that out. So the deferrals further complicated these type of things.
Yes, if I may just one point, Ali, sorry to kick in, but I think that raises one important point that has not been fully discussed, and for which the deferral period may be quite useful. That is, we are talking essentially not of tax assessments, but complying with reporting obligations. This is tax compliance related. And well, some of us even discuss if this is tax compliance or if this is any sort of general compliance rules that we are now putting in place. But we should not only filter the transactions that we need to report, but also to justify why certain transactions were not reported. And I think that in the interim period, this will be very important because, well, if we discuss, and I think that we were coming to that point shortly, if we discuss if we should now just simply stand by and wait for the next deadline to come, I would say certainly the answer is no. Just like in the DOTAS and in the previous Portuguese regime, we need to understand that our internal compliance procedures in the relevant stakeholders needs not only to start spotting potential intermediaries and potentially reporting reportable transactions, but we need to create a mechanism where we can justify that we've performed our compliance, we performed kind of a DAC6 due diligence process in order also to justify that we did not come to the conclusion that we should report this or that transaction because that went through the filter and it came out that it was not reportable. So it's not just about what to report, but also taking the benefit of time to check what not to report.
Yeah, absolutely. And I think that's really a lot of the methodology. It has to be around that. Can I turn, you started talking a little bit about, there are obviously some benefits to the deferral. So what can firms should be doing to take advantage of those deferral opportunities? If I can ask, starting with you, Robert.
Yes, I think most of our client bases are already preparing for. So let's say, in essence, the idea of the catch-up period was or is to analyze the processes, to analyze the transactions, and ultimately build, let's say, sound, let's say, additional tax risk management system to conduct all the necessary reporting for the future. So the problem within, let's say, or the problem arising here from DAC6 reporting is that all the information probably is not within one department in the various firms, plus a lot of additional alignment, consultation agreements with complete independent intermediaries is necessary. And therefore, let's say, the 6 months deferral period, in essence, offer the opportunity to enhance these processes going forward, disregarding, let's say, what is the quality of the catch-up period. So from a German perspective, let's say, if we have to report very soon all the transaction of the catch-up period, whether we can really apply the intended quality level of the reporting with all the necessary documentation, either to be reported or not to be reported, it might differ between the various players. But it definitely accelerates the need to enhance the processes going forward.
Yeah, and I think that's the key thing, which unfortunately, and I have to say, some less enlightened financial firms have decided to put the snooze button on, thinking they've got another 6 months not to do anything. I don't think that was certainly the intention. And I think you rightly point out, Robert, that it's so much to do with the data, particularly if you've got, say, for example, securities lending, or you've got private equity, sort of like houses, which you've got that complexity, and it's all about data. And I know, Danish, you have a particular interest in data analytics. I mean, is there a takeaway lesson that you have for the financial industry in terms of the data mining they have to undertake?
I just wanted to build off of Robert's point first as well, because he mentions that there might be a need for more standardization, and there's not all the information that's held in just one department necessarily. So with that, I think business partnering is an important focus for corporates and intermediaries at this point. Banks and financial institutions should be working on identifying historical arrangements going back to 2018. I believe many are relying on business partnering and informing relevant stakeholders internally to flag their transactions that may have features that fall within the hallmarks of the wider reporting regime. So also building on Francisco's point, there might be a need to build in a process, a framework for tax compliance management moving forward. And I think those stages are already in development right now. But we also have to remember that many corporates and intermediaries were facing a lot of information paralysis in 2019, given the large number of arrangements and what they were targeting under the regime. So data and reputation are important. It's important for corporate security. Part of the discussion is also on how much to report under the given hallmarks. I think corporates like banks and pharmaceutical companies are being a little bit more careful to not report too much data and not open themselves up to long-term challenges from authorities potentially. So I don't think at this stage tax authorities necessarily need to be able to analyze all the information that they're getting from various stakeholders, but having to have a process to be able to collect and store that information long-term, and then maybe look back at it in coming months or years when the analytics develop even further. I think that's an important point to keep in mind, that they don't need to be ready to analyze the information at this stage just yet. I think that's an important point for corporates to keep in mind as well. Standardizing scope is my last point that I want to bring up on data, because standardization in terms of the forms that you'll be using to actually submit these reports is going to be important, and what features are there across jurisdictions, and what companies are going to be reporting on these forms. So many corporates and tax advisors are hoping for more standardization, like Francisco was said, on legal definitions such as intermediaries, and more definition and detail on the scope of the reporting requirements. So I think I'll end it there for that, but that's what I have right now.
Yeah, I mean, that's really interesting. I mean, I think what I'm really taking away from is we have been granted this extension, and just from the way you guys have articulated, that given the amount of work that needs to be done, that really cannot be squandered. We really must take advantage of that time, particularly around the data collection, the cleansing of that data to make sure that it's fit for purpose. And on that point about the data quality is, I mean, I'm always challenged by this philosophical question between, quite often governments will push through a measure because they're keen to get a process going, but they will say, we'll work out the details and we'll pick up on the accuracy later on at a later stage. Is that something that private sector can do, just get the process going and then we'll work out the details? Is that a viable strategy, and particularly in the case of Germany, because I think that's what we're looking at. I mean, is it better to just get the process right and then we'll figure it out later on, Robert?
I'm a little struggling here with the answer, and especially due to the let's say topic here we here are discussing. let's say, this transparency topic, very transparent reporting also for third-party, ultimately for third-party interest from the intermediaries, is really sort of a cultural clash which is taking place from at least from a German legal perspective. For example, that the professional secrecy arrangements are significantly infringed, and also that let's say that okay, tax planning is now let's say an equal planning field is established with the tax authorities, and there's uncertainty in respect of, let's say, the transactions to report it and so on. So I think it's here the tax authorities, or here, or from a legal perspective, are really creating uncertainty up in a certain let's say or up to an amount which is not seen very often, to put it this way. And now they are also pushing, let's say, the button to report as quick as possible. And as Dennis outlined here, the big data gathering on an additional level or on EU level with all the analytics ahead of us really changes, let's say, the balance between, let's say, here the players and all the market participants and the tax authorities. And let's say from a political point of view, I do not know whether this is intentional, yes or no, but if you, let's say, set up such a cultural clash, if you enhance the uncertainty and then force everyone to report as quick as possible, the biggest gains are ultimately for the tax authorities in this process. Yeah. Because due to the uncertainty and the legal risks, probably not in Germany for the catch-up period, but going forward very quickly, everyone is taking the route to be more risk averse and therefore report more than probably if you have a lot of time, if you can, let's say, align with your partners and get a unilateral understanding on the EU level. So more reporting will be conducted. That is then probably necessary, and this is for the benefit of the tax authorities.
That's a very, very valid point, and it was a somewhat facetious, sort of like rhetorical question I had posed you. And I think that really is the challenge that financial firms face, Robert, is, that option to just rush through is just not available for financial firms. They cannot knowingly give information that they can't stand behind for legal and other professional sort of like standards. With that, this has been a really interesting discussion. Alas, we have run out of time, but I would like to firstly thank our panelists. They have been wonderful for sharing their insights. We do intend to continue this dialogue, so please do join us, where we, in collaboration with our partners, are going to be leading the discussion on DAC6 for the financial services industry. And on the screen, you can see the whole lineup of webinars that we've got in the series. So, just next week, we have not one, but two webinars that we are hosting on DAC6. On Friday morning, we will be discussing how DAC6 has been implemented by traditional banks. And then in the afternoon, we will be discussing the scope of DAC6 as it applies to private equity and hedge funds. So please click on the button, the prompt that's appeared on your screen. And with that, I would like to just thank the panel again for the insights, and our audience who participated, and thank you for the questions. And if you are interested in discussing how DAC6 applies to you, please contact us and we'll be happy to help you out. Thank you very much, and to the organizers, thank you, stay safe, and goodbye.